important. All right, guys, my name is Mrs. Money, and I want to share with you the crash and boom strategy. Right, we begin by adding indicators that are important on the charts. Right now, the only indicator we have added is the EMA 10. EMA 10, and I use the red color on it. The next moving average that we add, I will tell you exactly why I add these moving averages, why them. It's very important that you add the effective ones. Period 35 SMA. I make it color yellow. And then we've got yellow color. If you don't learn today, believe me, if you don't learn today, I don't think I'll ever be able to explain anything else further than this one. This is going to be very straight to the point, and it's going to be life-changing if you follow correctly what I teach you today. And then what you do have also is okay, pardon me, I was just looking at these messages. Let's insert the third indicator, another moving average. Moving average now 200. Let's make it the exponential. There's very little differences between exponential and simple moving average, but exponential is more sensitive to price than the simple, but they are both equally important. And then our indicator that we add next is the Bollinger Band. The Bollinger Band, I like that color, I don't know about you. And then now let's add another indicator, which is the RSI. RSI 14. Our parameters, let's make it 70 and 30. Press OK. All right, now we've got all our indicators on the charts. Let's quickly look at how we use indicators as I've put them. This one, let's start with the highest moving average, which is moving average 200. I will be talking about these moving averages on the 1 minute charts first, and then we can look at them on other time frames. We have here in our charts crash 500, and it moves just the same way as the other crash and boom assets. So just that this one is faster. Number one, it's the moving average 200. It is there to gauge or tell us the overall trend. If price is going up, then the moving average 200 will be on the bottom here, like right now. So price is trending upwards. When price is moving sideways or consolidating, normally it's consolidating. When it starts moving sideways like here, it's trying to bring a change. And so it will be flat, and the moving average also will be flat. Hey, John, God. Anyway, then when the price, when we have the price below the moving average, it's a signal that the price is largely on a downtrend. Okay, so that is for the 200 EMA. Let's talk about the second EMA, which is SMA, which is moving average 35. Moving average 35 is very, very important in also doing the same thing, gauging the upper trend and the upwards trend and the downwards trend. But we use SMA 35 for price bouncing. Price will bounce on this EMA when it did not bounce on these two. When it did not bounce on the moving average 10 and did not bounce on the moving up, on the Bollinger Bands, it's definitely going to bounce on the 35. The 35, we use it to also put our buy and sell. When we see moving average 35 price going under, then we start selling. And we see, when we see price going above the moving average, like here, it started going above moving average 35, then we start buying. That's moving average 35 on the 1 minute time frame. And then we have moving average 10, also on the 1 minute time frame. This moving average is very important. Okay, before we get to that, we've got a moving average 20 here, which is the middle Bollinger Band. The middle Bollinger Band is period 20, meaning that when you've got it, pardon me, I need to close trades. Okay, I've got running trades. Okay. I hope I'm going to survive. John is giving me a problem. Okay, I'll close everything now. Sorry about that. It's gonna be very bad for the recording. What we are doing now is looking at how we use moving average 10. Now look very carefully. On the 1 minute time frame, when the price is trending downwards, like there are people asking, is it gonna boom again? Is it gonna crash again? To know whether it's crashing again, you look at your moving average 10. The minute price goes to moving average 10, it then crashes. It goes to moving average 10, it then crashes. Here there's an invisible boom, visible crash that happened here. Moves to moving average 10 and then it crashes. Moving average 10 and then it crashes. So on a downtrend, you can measure your crashes by checking your moving average. In other words, because you never know. For instance, you just had 2 crashes right now happening. So you can never know whether it's gonna crash or it's not. You just have to prime it. So as you see, it's approaching the moving average. Like these 2 minutes, instead of losing your money here on these 2 minutes, you see it's going 1, 2, and then you put a sell here and then it crashes with you. I've done that a lot and it works every time. So here, what causes the crashes here is the crashes are not causeless. There is always a cause for the crash. It's either moving average 10, like here, or it's the Bollinger Band, middle Bollinger Band, like here, or it's the 200 EMA, like here, or it's the 35, moving average 35. Where is it? An example. This is it's where it crashed. I'm looking for an area where they use the moving average. Not okay, not on this charts here. But if you go on the higher time frames, can you now move? Okay, before we move, let's talk about the Bollinger Bands on the 1 minute time frame. The 1 minute time frame, the Bollinger Bands here are not very clear because they are following. They are not leading indicator. They are a following indicator because they follow the price. If the price is going up like this, they get straight. When it booms, it changes and it squeezes on a flat trend, and then it starts going up like this when the price goes down. So it's reactive. However, the Bollinger Bands will always help us if there was a crash already. Then you should check your middle Bollinger Band, because your crash, when it touches the middle Bollinger Band on a 1 minute time frame, it's usually going to react. Like it reacted here, it also reacted here, and so it will react when it touches the middle Bollinger Band. And then when price, because now we are talking about when to sell crash using the moving averages. How to sell crash using the moving averages? You sell crash using the moving averages by checking your 10 EMA. If your 10 EMA, like for instance, it will start crashing here. When it crashes, and then you start counting minutes, when it comes close to your 10 EMA, you sell again. Okay? And another way to sell your crash, is to use middle Bollinger Band, like I've spoken about it. You use middle Bollinger Band, and then when it comes close to your middle Bollinger Band, then you start like here, you sell again, and then it crashes on you. And then the other way is to sell using resistance here. You draw a line, and then each time it approaches this line, you put a sell, and then it crashes. You put a sell, and then it crashes. Okay? And then whenever there was a previous crash, like here, before this crash happened, this one happened. So this one is crashing on resistance. Same thing with these ones up here. They are crashing on resistance. So what's going to happen here is that when it gets to moving average 10, we're going to prime a sell again. And if it crashes, it goes down. When it goes up and then it touches the moving average 200, it's going to crash again. So I hope now it's clear to you that you can use your moving averages as a very clear indicator on when the candles are going to crash. Oh God, what am I? Oh. All right, now let's do this because I'm recording. This guy is causing serious issues for me. Okay, right, like guys, I was saying to you, we have our moving average 10, very important for us on a 1 minute time frame, that when price touches it, it crashes again. You will see this as well when you open your boom charts. That's what happens. Okay, right. And also, before the moving average 10, if the price should touch the 200 moving average first, then it's going to react as well. Okay, right, depending on how long the downtrend is. Remember, the good thing about these assets is that you can always have opportunity. Right now, we did not even check the longer time frames, the higher time frames. If you look at your 1 hour, price is on an this is supposed to be an uptrend, an overall uptrend since the 200 EMA is below. But then we see that the price has been going down, and the whole time it has been going up. Now it is reversing on a 10 EMA on a 1 hour time frame. So you can see now how this 10 EMA has been used on 1 hour as a trend line. Price bounces here and comes back. The same thing has happened on this hour. Price bounced here, and then that's where we saw how that long buying has turned now into a series of crashes. Okay, now, so what we do is you always check your overall trend by looking at your higher time frames to see and have a picture of what's going on in the price. What I wanted to highlight to you is that you will always have an opportunity. Even on this long sell here, sell is what we are, the strategy is about selling crash. So even on these green candles here going up, there would always be an opportunity for you to sell crash, even on a trend where price is going strong upwards. Okay, so let's go back to our 1 minute time frame, because this is where we do entry points. For the people who have got little capital, got low funds, you trade on the 1 minute time frame, because you don't want to be selling to sell here, and then you find that you are losing money going up, losing money going up, and selling again, losing money going up. Or even here, you sold here, and then all your profit was wiped out. So you don't hold trades when you don't have a lot of capital. But I will show you how to actually trade with holding the trades. You can actually make money holding the trades as well by using the moving average 35. Moving average 35 is better utilized on a 5 minutes or 15-minute time frame. Let's look at it. This is a 5-minute time frame. So if you are using, you got a much better amount of money, go on your charts and look at your moving averages. Even the moving average 10, you can use it. It's more sensitive. How you use it, as soon as you see price going below the moving average, like for instance, you are talking a moving average 10 and moving average 35 here. This is where they cross. But you see price, how you gauge is 2 candles on whatever time frame that you are trading. 2 candles below. See this 1 candle, 1, 2 candles that close below in the moving average. Then you start selling when price goes up and touches. You know that you don't just sell anywhere. You sell when price is on retracement. So you will sell here and hold your sell up until price starts going above the moving average. Like for if you are using moving average 10, then here, this is where you come out. If you are using moving average 35, this is where you come out with your sell. So you hold your sell. You can even put stop loss. If you put not stop loss, you can put if you take profits. I'm recording. So if you've got anything to say, just raise your hand or write it on a chat. I have a recording, Mr. John, so you will be able to see everything, okay? You'll be able to see the moving average. This is moving average 10, exponential. Moving average 35, simple. Moving average 200, exponential. And then the Bollinger Bands. Those are the lines that we have with our price here. So you can use that method to actually sell crash. When you see price moving below that's how to be sure, because you may think it's going below and then all of a sudden again it's above. So in order to find yourself not selling in this kind of scenario, you check for your 10 moving average 10, you check 2 candles closing below, which are red. So these ones here, this would be 1, and then this one didn't close red, so it's not a good signal to sell. Sometimes strategies will fail. So sometimes, like for instance, if you're using moving average 35 and you want to start here, you'll have a problem. But if you at least started here and you see 1, 2 candles, this 1, 2 candles closing red, then you start selling, you would make some money. Okay, so this is just to say that you can use these moving averages to prime your sell in crash. And then another way to sell crash, I told you, you use your the strategy that I've been teaching for long, and that is using your support and resistance. When price is trending sideways, it's almost always easy to trade, because it will go down and then it will come up. So you'll have a lot of support and resistance crashes. I can see there's someone who wants to say something. Can you give me just a minute to catch my breath, and then I'll be with you now. Okay, let's see. Oh no. The chats. Timothy, I want to say something, ma'am. Okay, John, it's okay. Thank you so much, Timothy. You know what we will do? We will open a question session. Right now, we've got 6 minutes into our recording. So let me quickly round up the strategy so that we can have one file for the recording. And then the rest, we will use it for sharing we can record it again, but we will use it to share our ideas. Okay, right. So can I quickly just round up? So we were selling crash here. Now, how we sell crash again? We use the support and resistance. So on resistance, crash will crash, like here. This is resistance. So it crashed on the 2 times here. So on this 3rd time again, it's crashing. And then same thing here, when you go a bit down, when you take this line a bit down, you will find that there'll be crashes happening on resistance as well. Also, when you go to the bigger time frames, like the 15 minutes, I like it a lot. I like to trade from the 15-minute time frame, because price obeys the candles there. It obeys the trends and the candle movements. So when you see a bearish engulfing like this on a 15-minute time frame, you know that the price is gonna go down. So you can get ready to sell crash, right? And then when you see on support, you see green candles forming, then you know that it's gonna be a buy on crash. This is where also the idea of Bollinger Bands starts making a lot of sense, because when price is overbought, and it's on the upper Bollinger Band. It starts going outside the upper Bollinger Band like that, then you know that a crash is coming. However, you must always differentiate the trends, because this is a consolidation and then a break to the upside. This is a consolidation and then a break to the downside. So you must always know what's going on with your price. If the price was on a sideways trend, check which side it chose to break out on, because then it would mean that the price is gonna be on the lower Bollinger Band for longer and not obey the buying. However, on a consolidation like this one, we see that price is going down and then it goes up and then it goes down and then it goes up like that. So that now it's very important for you to be smart with the price on what is going on. This is a 15-minute time frame. All your moving averages are still very, very useful as well. So how the 10 moving average works on a 15-minute time frame is that it works as a trend line. It works also like it works on the 1-minute time frame, that when price moves up and then it almost touches, in the 15 minutes, it's more like it's guided along the 10 moving average. Okay, and then let's move on. We didn't talk about the RSI, but I'm gonna go back and talk about it. The important time frames to watch is the 1 hour, where you can check the trend. Right now we see very nice thing happening on the boom 500 that is trying to go up. You can see the wicks here showing you the loss of power on the sellers, but then it failed to cross the 10 EMA and then it crashed again. But I think what it's gonna do from this candle is gonna try and just push its way up, because it wants to go on an uptrend very badly. Okay, right, and this kind of a big crash here, it looks like a reversal candle to me. I could be wrong, but we analyze differently. But it's very important to have some kind of analysis that you make on your 1 hour, 4 hour, and your daily charts. Now, this is how the strategy works for selling crash. For buying crash quickly, we buy crash on an uptrend like this one here. The minute you see on your 1-minute time frame, there are pointers that will allow you to buy crash. Number one, it's when the price has given you a small crashing candle in between. That is your sign for you that you can be able to buy a stretch. When the price is on an uptrend, then you can buy. And then when the price also booms below the lower Bollinger Band, then you can also buy. But you don't just buy a non-stop. You buy a few minutes, 5 minutes, and then you come out. That's how I buy crash. Okay, guys, that is all the strategy I'd like to share now. Next time, I will give you a link and then we can discuss questions and contributions. Thank you very much.